So tell me, from your perspective, how does Silicon Valley weather this? We're already seeing layoffs among some companies. There are going to be ripple effects for housing, for livability there, probably for the mindset of entrepreneurs. What are you thinking, and what do you think Silicon Valley needs to brace for?
Silicon Valley is not just one type of companies. I'm seeing several things that are happening. One, it's clear that we had a lot of capital that has been rushing into the market, in this bull market for the past 9-10 years. And with that, there were a lot of companies that really are more like a function than they really are a full company. I think in these kind of times, they're going through a very, very tough time. Other companies are taking advantage of this crisis, and they were able to fully capitalize their abilities and mobilize their workforce to do very incredible things, really, for the community around the world in this kind of time. And they're doing extremely well.
So Alfred,
San Francisco, yeah. Go ahead,
I want to zero in on something you just said about some companies are more functions than companies. There've been some questions about what happens to M&A during this period. And typically, if you have a company that's in that position, if it's a good functional company, it ends up getting acquired by a bigger company. But is it kind of exploitative to do that at a time like this, where strong companies might be particularly strong and cash rich, and weaker companies might be under pressure, and the employees who have been working there for quite a while might not get a great outcome from a sale?
Well, actually, we're seeing some M&A activities that has already happened. Facebook has been very active in this market. They spent $400 million recently and bought a new company. And I think they're filling in all the white spaces that they need the functionality for. I think we're going to see a lot more M&A activities as the world kind of get more stabilized, because right now things are kind of difficult to do because people are still getting used to working from home, talking to each other on Zoom, and kind of getting back to the rhythm of lives. And I think the reactivations is happening. Once I think that get activated, we will see a lot of M&A, just like what we've seen, post the .com crisis. The ones that survive, they continue to do really well. Some of them, they get bought, and they do very well inside those companies. I think we'll see the same thing this time again.
Alfred, I wonder what you think happens to the geopolitical balance of power, particularly in tech, coming out of this. I mean, Europe has been trying for a long time to build more of a tech ecosystem, particularly around fintech, but they're taking a big hit. The U.S. dealing with its own struggles. China was looking pretty bad at the beginning of this, but now is looking substantially better in the way it seems to be emerging from this crisis. Do you think that's going to have any impact on investment in tech and strength coming out of it regionally?
Well, I think it's not only geographically, but I've been waiting for this for a decade. Crisis actually created a very unique opportunity for investing in tech. Because generally, if you look at what happened to 2008, you look at what happened to post-2000, the world kind of get a reset, and everyone kind of now is focused on looking at what happened in the world in 10 years. One thing we do know for sure, technology in the next 10 years to come is going to be so much more exciting than the technology we have even seen today. Anything that's not automated will be fully automated. So that's why I started Raise Capital, is because I want to take advantage of this time to go into this investment. And the other thing on the geolocation part of it is very critical. We have now democratized the whole concept of the company can be fully decentralized. They can be anywhere, which is something that we are doing haphazardly. Some company have some employee can work from home, but most of them, they work in the office. Now it's different. Now everything is decentralized. So the company could well be anywhere. Actually, yesterday I talked to a company, very exciting company. There were 3 young guys. They started the company in San Francisco. And 3 weeks later, when I talked to them again, they were back to Toronto. They said it's very simple. The exchange rate is 1.4. Now they got 40% more capital to work with in the cost that they're working on. So I think we're going to see actually the inverse. Actually, this will decentralize the way that we're going to look at investing in companies.